All right, all right, all right. We are looking at the Nasdaq on this Thanksgiving week. We have much to be grateful for. The index certainly has had a change of character since the month of November started. Anyway, our friend Mr. Webster always talks about observing the fish tank, and what have we seen recently? After this long run up in this power trend, we had this three-wave down correction, which is 12% peak to trough, which is a garden variety correction. And since then, we had our follow-through day on November 1, a subsequent follow-through day, and just powered through the 50 simple moving average. And if I go to the weekly chart, you're going to see three hammer candles, or they could call these three soldiers or whatever. You can call them whatever you want. I call it very bullish for an uptrending market. Today the index was up 159 points, or 1.13%. And if you look at the volume, not bad for a Thanksgiving holiday shortened week. Pretty strong volume, more than I expected. Anyway, the Nasdaq looks very good in a confirmed uptrend. There's some concern about the, I'm not going to go to the IWM. I'm going to go right to the Russell 2000, because this is not really playing along. It's kind of lagging. I have mentioned many times here this, inverted head and shoulders, which is a bullish pattern. It just has not really played out yet. It needs to trade through this 200 and start really ramping higher here and getting above some of these old, the resistance periods here, like 1830, which would be one here. See if it can get above there. But you can see the downtrending, moving averages, and this thing just cannot get any momentum. We're just going to take it a day at a time, though. And, with the Nasdaq going higher, everybody points to the Magnificent Seven doing well, and they are, but it's just not those. It's really lazy and ignorant to be saying that these are the only stocks that are doing well. There's a ton of stocks making new 52-week highs. The Magnificent Seven are the largest stocks, so they are going to drive the index higher. I will admit that, but you just got to look at how many stocks are making 52-week highs, and it's not just these stocks driving the market. This is Apple. We had it on our ready list. Still looks good to me here, right at that 189.98 level. Yeah, nice little pattern there, still consolidating within a base. And that's why when, people might say that the index is extended, or, they've gone too far too fast. These big stocks are just setting up in bases. They haven't even moved yet. Microsoft, same thing. It did have a big move, but this is just setting up in a cup with, not a handle yet, just a cup shaped base. It got, Friday pulled back on the AI news. There's been a lot of AI news this week, and you're going to hear more tomorrow from NVDA. But with, allegedly Sam Altman leaving, and then today the CEO pulled some strings and showed his prowess as a CEO, and got OpenAI back together again, and the band's all back together again. So everything's hunky dory. It was up more than 2% today. This thing looks really good. I mean, I would like to see it pull back, but it just might not. It might not. And I believe Microsoft will overtake Apple eventually as the largest company. The Meta Platforms, this one still looks good to me. It's starting to push away from its base a little bit. We had it here at 312 buy point, but that's an early entry, and certainly a standard of 326.20 there. But it's starting to push away even from that buy area. Amazon, another one. OpenAI, an artificial intelligence big player here, and it's still setting up in a base. And this is why I'm bullish on further gains in the indexes, because these stocks they haven't moved out of bases yet. So they've just been consolidating for many weeks, and I would think a big move from all of these would drive the indexes higher. In fact, I know it will. Google still setting up in a base here above its 50, acting well. Tesla is below its 50, but it's setting up in a double bottom base here, and this is why I say there could be a lot of legs to this new uptrend here. It just started, the beginning of this month. So when I hear, pundits financial news media talking about, you know, it's gone too far too fast and it's gone too crazy and it's just getting too wild. It's like, no, it just started. We just had 3 months of torture and a pullback. So geez, give it a rest, people. Just follow the charts. Follow the charts. This is NVIDIA. Double bottom base. It did make a new high today, which makes me a little nervous ahead of earnings, but man, this thing looks good. Double bottom base, and it has a 9% IV. I wouldn't be surprised to see that thing move higher, but of course it could sell off back to its 50 as well, which would be down around that 450 area, I believe. Yeah, 445, probably 450 tomorrow. So anyway, NVIDIA looks good. They all look good. Everything looks good. Since I'm on this semiconductor with NVIDIA, some people ask me if I would look at some IPOs here, and this is ARM, and this one just has, it's going to need time. You see that's got about 3 billion in sales, and it's got a 60 billion market cap. So it's trading at 20 times sales, which is rich for most companies, even high-end semiconductor fabulous stock. But yeah, just this one's probably going to need some time. It undercut its IPO low, and that's normal. It came down to 46.50. This one's going to need time. It's going to need to deliver quite a few earnings reports here, and it's just going to take time to get that IPO off the ground. This is AMD. And I really like this. I keep coming back to this little trend line that it traded above, and now it's showing strength. But really, if you look at the weekly chart, it's just setting up in a little cup-shaped base here, which it looks good, and it's got to build out the right side of that base. So that 132 would be, the standard buy area for AMD. That one looks good. Broadcom, AVGO, I believe it traded at 1,000 today, maybe not. Probably going to have some resistance there, 998 almost. So yeah, very close. But you could see the long consolidation. You got to look at the weekly on these charts. The big consolidation here, then it made its move, and now another 8 and 9, about 13 weeks of consolidation, just in like a flat base kind of shelf, long shelf, if you will. Now starting to push away from its base. So that one looks good as well. Rambus, another one of these fabulous stocks, made a new high today, and you can see the consolidation here. Should have had this on my list. I'm really pissed at myself for not putting it on this morning because of this move higher, and then the pullback, that couple-day pullback, and then today it was up 5%, still near that 68 buy point, but made a new high today, and you can't kiss all the babies. So Synopsys made a new high. This is a semiconductor design. Computer software designed for semiconductors. So if these stocks are doing well, I believe it bodes well for the semiconductors. It made a new high today in KLA. I used to call it KLA 10 core, but now it's just KLAC. KLA is a company. KLAC is the ticker. Some of the old habits die hard. But anyway, this one made a new high today after consolidating in a base. And you can see how some stocks are extended, and then I'm showing you some stocks that are still in bases. So, don't, if you missed some of these big moves, don't panic, don't fret, don't chase, because there's still stocks coming behind that are setting up in bases that have better entry points where you don't get hurt. Don't chase. Don't try to chase performance. You get hurt that way. Okay, some people asked me to go through some more IPOs, and I only went back to 2019, and it was like 900 IPOs to go through. But this is Shark Ninja. Somebody asked me to go through Shark Ninja, and I do like Shark Ninja. Why? Well, because they have like 4 billion in sales and a 6.3 billion market cap. This is not an expensive stock. You could see $2.38 of earnings. I mean, this is a very inexpensive stock, actually. And you can see it set up here in an IPO base. And those folks at mcstockcharts.com know the power of an IPO base. So this is definitely one to watch. So whoever brought that up to me, thank you. Shark Ninja, I like. BIRK, I do not. BIRK has been around forever and a day. This is like from the 1700s, and its revenues are consistent, but it's got nearly an 8 billion market cap, with 1.5 billion in sales or 1.3 billion in sales. and the footwear companies just do not get afforded that type of multiple. And you know, I don't really look at PEs. It's got a 46 PE, but sales, you know, it's sales to price is they need more sales, and it's been around so long, they don't really have new products per se, and so I think it's probably going to be in a, you know, an IPO. What do they call them, late bloomer, or it's just going to be hanging around these prices for a while. You know, it's been between 40 and 38 and 42, somewhere in there. I don't anticipate that one just being a rocket ship. But you never know. Always keep an open mind. Chipotle, this one was a rocket ship, and now it's been setting up in a base. And I got to show the weekly here because you can see this consolidation pattern here, this little cup shape, and now it's starting to move away. Oh, it's up $24 today. Nice move, more than 1%. So Chipotle still looks good, and that one, it will probably remain on our ready watch list. And this is Wingstop, one that I missed. Can't kiss them all the babies, but man, that looks good on a daily. You can see it on the weekly. Nice symmetrical cup. And a lot of these stocks are not forming handles because, you know, the market's so strong. They're just trading higher and pushing away from their bases. Deckers is one that got downgraded last week. Give people, you know, it was forming this little shelf after earnings. It formed this little shelf here, and then it got downgraded. Boom, came back to the 10, found support, and it's now back near the 630 area. Volume drying up on this one. Deckers looks good to me. GIL, this is Gildan Activewear, and it made a new high today. You can see it blasted higher. Got to look at the weekly on these, out of this consolidation pattern. So it made a new high on today, which is you know, that's always a good thing. Anyway, that's it for the retail. So I went through semiconductors, retail. Oh, I got to go to software. Quite a few software names on our ready list had really strong days today. I would consider 4% a nice day. Palantir has been on our list for a while. Since this move higher, the pullback to the 10 found support there. Now it just keeps grinding higher and pulling away from its base. You can see on the weekly, you know, the stage 1 base ran up. Now it formed a stage 2 base, and now it's starting to push away from that base. Still has a long way to go, and I wouldn't worry. I don't concern myself with the overhead supply. Really, that was a long time ago, December of 21, and people are gone from there. So we know that the Fed raised interest rates. We had a big bear market, and that's kind of in the past. So Shopify was up today. This was one that I did not have on my list. It was a double bottom base pattern, and now starting to break away. Yeah, sorry, folks, I missed this one too. Like I say, you can't kiss all the babies. 7.4% above the 10, that green line there. So that one is adios, muchachos. Like I said, you don't have to chase this stuff. Spotify was on our ready list, 3.8% above the 10. Had a nice day today, more than 2%. I would say, you know, it's pushing away from its base, but you know, still could be actionable on pullbacks. So that one looks good. BRZE, this one made a 52-week high today. It's been on our ready list for last week. You can see the double bottom pattern here. I would consider that, you know, a double bottom, and now, you know, breaking out of that base to new highs, a new 52-week high for that stock. And of course, ServiceNow, just a monster of a stock, big behemoth, 136 billion market cap. Had this consolidation, now just breaking out. So November has been very good for the software, semiconductor, you know, artificial intelligence groups. And my favorite area right now is computer software security. They have been strong. You know, when the Nasdaq was pulling back those 3 months, these ones were just, you know, being accumulated, marking time. And now that the index has improved, these are leading stocks making new highs. You know, any stock making a new high is definitely something to watch, right? 193 today. Very nice day for Zscaler, CrowdStrike. Now, these two both have earnings next week, so you got to be careful. A little trim, little raising of stops. would be appropriate. I talked at MC Stock Charts, you know, if you bought this thing at 170 and made the trade to 200, say you bought 100 shares and went from 17,000 to 20,000, you just took that $3,000. Congratulations, move on to the next trade. If you want to hold it for further gains for longer term, this could be a big winner. That's fine too. And if you just want to sell like half and then raise your stops, and then that way, you know, you guarantee yourself of a winning trade. So you have lots of good options there with CrowdStrike. Palo Alto Networks is going on our ready list tonight. It pulled back after, you know, really strong earnings report. It's just kind of like sell the news. There's nothing wrong with it. It just undercut its 50 and then rallied right back. And to me, this is a buy right there at that 258.88 buy area. It's closed right near there today, just a tick above. But yeah, I like it to make new highs above that 266 area for our Palo Alto Networks. That one is strong. And then QLYS, this one made a new high today as well. This one broke out. You can see this big move, and this is why, you know, we track these moves here of 11% with 210% above average daily volume. That's not to be ignored, Dan. And anyway, the last was 170. Now it's at 179. So you'll take a $9 advance. I think most of us will. Anyway, so that's why we pay attention to those. Some other stocks setting up in bases. Now, the drug stocks have not been participating in this rally on the Nasdaq since November. It had a nice move here from 89 to 104 in October, but since November hit, this thing's been doing nothing. Once again, while the Nasdaq was correcting, these things were just going sideways. This is Novo Nordisk. You can see it didn't pull back like the indexes. Tells me that it's being accumulated, and institutions don't want to sell this. It pulled back to its 50 and now has a standard buy point at 104. I believe we had it at 188. Yeah, 188. And just a strong stock. I mean, this is another one you could put in your IRA and kind of stuff it away for 10 years. This has been a real big winner. I mean, past performance doesn't guarantee future results, but if you look at the monthly on Novo Nordisk, I mean, hard to argue with that one. Quite the beast. Lilly is another one that's near a buy point. I like both of these too. I don't know which one you like better. I have 601.84 as a buy, but you know, it's right there. It's been consolidating once again. Did not participate, you know, in the big rally since November hit, but that doesn't mean it won't. You know, they had big moves and now they're consolidating. So maybe if the Nasdaq flattens out, these things are going to start to you know, rally. So you just got to be patient with these. You can see you know, it's just been consolidating a little base here, maybe needs more time. That's Eli Lilly. You know, these companies are just got a duopoly on the weight loss, obesity, and now cardiovascular drugs. I've talked about them a lot. TGTX has best in show multiple sclerosis drug. They kind of blew it early on by promising too much, and then they didn't deliver. They thought they were going to get a lot of conversion patients, and they didn't. But they're getting new patients, which bodes well for 2024. So, you know, I had 1140 as the buy. It's just a tick above it. I believe it. It's going to close this gap here at 1956. I could be wrong, but you know, in time, a couple more earnings reports, 1956, I believe it trades through there. We'll see. They're all indications are that they are starting to get more and more sales from new clients of MS. And anyway, that's it for me today, except for I have one more thing in honor of the great Steve Jobs. Over the weekend, I did a little IPO review of just stocks from 2019. Now, there wasn't a lot of IPOs coming out last year because of the bear market in 2022. We've had a few more this year. They've kind of been richly priced, and I feel like the underwriters are a little greedy. But I went back to 2019, and some people asked me to go back further and take a look at some stocks here. And one that, you know, obviously was a big winner was ELF. And this is an IPO based from November of 2016. It was at $32. And in July of 2022, it's at 34. So that's 6 years. That's a 6-year base. And that's what I'm talking about with the IPO. Sometimes you have to be really patient. Okay. ELF had this, you could call that definitely a cup with handle pattern breakout. had a monster rip, right? And it broke its uptrend line on the daily, pulled back 2 months, but now it's starting to stabilize and it's getting good volume. This month of November, it's up by 20%. So definitely down, but not out. It needed, you could see this big move. It needs to take a little bit of a breather. You could see a little better on the weekly. You know, this big ascent from 2020, the COVID lows, you know, just a straight up rip, you know, not even stopping, you know, for $200 if you ever play Monopoly. It did break its upper trend line, but this is definitely, if you go further back to the IPOs, yes, there are definitely some huge winners. I just went back to 2019 and there, like I say, there hasn't been a lot of them recently. Celsius is another one that, you know, this is a late bloomer, you'd say. It IPO'd and didn't do anything for a long time. It IPO'd, I believe, in 2017. Yeah, May of 2017. It's a dollar. It's just split recently. And you know, you can see a little bit later on, it's still $1 in 2020. So that was the COVID low, but that's 3 years, right? 3 years, late bloomer, and then all of a sudden, boom, rocket ship, right? And Celsius still looks fine to me. It had some selling recently. You know, one of the largest private owner, Carl DeSantis, passed away. His estate is selling some shares. They waited to this earnings report and they started unloading. You can see this is massive volume here. So I don't know if they're done, but I could tell you one thing about, you know, if you want to take a look at the, you know, the daily short-term look at Celsius is getting support at the 50. You know, it came down to the 50, rallied up, then retested here, rallied up, and then retested 50 again. So that's 2 retests. To me, that's pretty important level there. If you're into, you know, picking bottoms on stocks, Celsius up 8% today. It looks pretty good. You just wonder, you know, if these guys are through selling their stock here. I don't know. One more, somebody asked me to look at Crane CR. This is typically, I wouldn't say, you know, it's a diversified operations. You know, the Crane, they're into a lot of things. I just want to point out a couple things about Crane. You know, good cash flow, return on equity above 15%. You know, acceptable. The up down volume 1.4%. Anything above 1 is good. Its beta is 1, so it trades with the S&P. All things look good here for a Crane. You could see this little IPO base, this consolidation, then it ran up, formed another base, and then ran up again. So whoever pointed this out to me, thank you. This is definitely one to watch. Don't be closed-minded. You got to be open-minded. Just because it's not a tech stock or a semiconductor stock, software, or whatever, these stocks can be big winners too. And this IPO base looks really good to me. Run up, another consolidation, another run up. So Crane, yeah, for just coming out of an IPO here, it's had a few good months, I would say, right? This looks good. Came out in April of this year, I believe. Yeah. So yeah, I mean, if I'll continue to look at IPO stocks. Like I said, I had from 2019, I had over 900 stocks to look at, but a lot of the super growth stocks do their best performance in the first 8 to 10 years. And so maybe I should go back to maybe 2013 or 2014 and look at some more IPOs. Anyway, that was an exercise that I did recently and thought I'd bring it to everyone's attention. And I want to just thank you for watching. This is a Thanksgiving holiday week. I expect the volume to start drying up this week. The market is in a really good place. And we need to be grateful for all of the things that we have been blessed with. And at mcstockcharts.com, we never give up. Thank you for watching.